Hey there. If you're running an HVAC, plumbing, or electrical business and you're still a sole proprietorship or LLC, you could be spending thousands in taxes every year that you don't have to. So let's talk about when it makes sense to set up an S-Corp, how it works, how much you can save, and when it's too early to make the switch. So first off, an S-Corp doesn't have to be a brand new company. You can take your existing LLC and choose or elect to file your taxes as an S-Corp. What you'd be doing is simply telling the IRS, hey, I want to be taxed differently. And why would you do this? Well, instead of paying self-employment tax on the full amount of profit that you're making, you'd pay yourself a portion via payroll, and you'd only pay the self-employment tax on that portion of your income. So that can be a huge tax savings. But let's throw some numbers at that. So let's assume that you have a $100,000 taxable amount. So you probably have more in profit, but then you have the standard deductions. Let's just keep it simple, $100,000 taxable amount. So if you had to pay the full self-employment tax on the $100,000, so full 15.3%, that'd be $15,300 in self-employment taxes. Now, if you filed as an S-Corp and you paid yourself a $60,000 salary and took a $40,000 distribution, for the self-employment tax portion, you'd only pay that on the $60,000. So you'd be paying $9,180 in self-employment tax, which is a $6,120 savings relative to filing as an LLC. So purely filing your taxes different and running that payroll saves you $6,120 in taxes. Whoa. Hold your horses. I know, big tax savings with filing as an S-Corp. But when is it the right time for your business? Well, if you're less than $50,000 profit, if you have bad bookkeeping, or if you're not ready to run payroll yet, then it's not the right time. Typically, at that profit level, the tax savings just isn't big enough to justify the additional admin and payroll costs. So keep grinding, build that business, and know that there's a huge tax savings ahead. So when does it make sense? Well, if your business is making more than $75,000 in profit, you have reasonably clean books, and you're willing to run payroll, then it's probably the right time. At this point, you would then be able to shift thousands of dollars back into your pocket without too much headache. All right, so how do you do it? Well, 5 easy steps. So have your existing LLC or start one. Step 2, file IRS form 2553 by March 15th. If it's already mid-year, you can file it mid-year. If you need help with that, talk to your CPA. Step 3, set up payroll and pay yourself a reasonable salary. So you can set up payroll through a lot of different providers. You can find a local firm. You can check out Gusto, ADP, Heartland. Those are a few of the big names in the industry right now. And then most importantly, you have to pay yourself a reasonable salary in the eyes of the IRS. So a reasonable salary is based on the tasks that you're doing for the business. Now, there's a bunch of tools out there that'll pull reports and tell you what a reasonable salary is for your jobs and location. But talk to your CPA. They can also probably give you some pretty good guidance on this. Step 4, keep clean monthly books for the rest of the year. Make sure your payroll is going through well. And then step number 5 is simply file your taxes next spring as an S-Corp, and then you'll get all the savings. And if that sounds like a lot, don't worry. So you can work with some trusted advisors, your CPA, a bookkeeping firm, whatever you need to knock this out. So there are a few things to watch out for when you go to file taxes as an S-Corp or switch your company to this process. If you don't pay yourself a salary at all, that's going to be a huge red flag to the IRS. You're going to immediately just get in a ton of trouble. So make sure you're doing the payroll portion. And now following that same train of thought, paying yourself too much or too little is bad. The IRS wants reasonable compensation. So if you're paying yourself too little, that again throws a red flag. And if you pay yourself too much, the IRS is okay with it, you're just losing out on the tax saving. If you switch to filing this way too early, it just doesn't make sense from both a time and cost perspective. You have the extra time of setting up and using payroll, and you have extra costs of running payroll. And then fourth, don't commingle your business and personal expenses. So if you have not gotten your books separated, your business and personal separated, then don't do this. It's just additional complexity in there that you don't need. Fix the simple things first. So now you know why to set up an S-Corp, you know when to set up an S-Corp, you know how to set one up. But if I missed anything, or if you have any other additional accounting related questions, not even related to S-Corp, just shoot me a DM and I'd be happy to help. Talk to you soon.